Awesome. Well, this is a panel I was really delighted to help put together. So all four of you here are really pioneers of this venture studio, venture incubation model. And I'm excited for us to kind of get into the art and the science of that. It's been a really busy week too for many of you, new funds, companies launching as well. So I figured the first thing we could do is just go down the line, have you guys introduce yourselves, introduce your fund, thesis, et cetera. Why don't we start with you, Jack?
Sounds great. Great to meet everyone. Great to be here. Thanks for having us, AJ. My name's Jack Abraham. I'm the founder, managing partner, and CEO of Atomic. We started Atomic in 2012, actually helping pioneer the studio fund model for the technology industry. And we've started several dozen companies since then. We operate in all sorts of sectors. We like to be agnostic because the opportunity set is constantly changing, as you'd imagine, like many. We're focused, a lot on AI and things of that nature and how it can transform industries now, but that's a little bit different than a few years ago. And we just announced on Monday, we closed our fourth fund, a $320 million fund to incubate and start and scale new companies out of. So great to be here.
Go for it, Zach.
So everyone, Zach Weinberg. I've actually known Jack since college. This is kind of a funny little setup here, since we were like 19.
Yeah, 19.
So Zach Weinberg, I was the founder of a company called Flatiron Health in the oncology space, and left Flatiron to start what is now called Curie.Bio. In a funny way, I would actually argue we're not a venture studio. We're kind of like the inverse of a venture studio, which in a sense means we help other people realize their ideas. So the ideas that come to Curie are not our own. And Curie is focused in biotech. So we have a unique little structure where we have both a seed fund. We have a $270 million seed fund that writes checks. But we also have a separate accelerator. You can think services company that does all of the work with founders on strategy and execution, but provided as a service out to the market, so out to founders. Founders come with the idea. We help them go from idea to concept to Series A. And we've actually raised a separate vehicle for this services company. So it's a new structure. It hasn't been done before, at least in this market, and brand new. We raised the capital about 9-12 months ago. So.
Awesome. Lisa.
Hi, my name is Lovisa Afzelius, and I'm an origination partner with Flagship Pioneering. And Flagship is a quite different venture cap in the sense that we actually build all our companies ourselves from the bottom up. So we are the inventors of the technology, we hold the patents, etc. And I run one of the origination teams, one of our 4 pods that are actually building these companies. So over the last couple of years, we co-founded, and I'm the founding CEO of Alterna, which is the world's first tRNA platform, 𝐻𝐢𝐬𝐵io in variant-proof vaccines and antibodies. And then on Tuesday, we launched also 𝐻𝐸𝐴 which is more in generative biology. And we have another one coming out soon again, but more on that later.
Well, pleasure to be here. AJ, thanks for connecting us. Actually, Zach and I have known each other and talked over Zoom for a year. We backed Curie.Bio as well, and this is the first time we met in person, so I guess this is a reunion in so many ways. My name is Alaa Halawa, and I head Mubadala's ventures business here in the US. Mubadala's ventures business is part of Mubadala Capital, which is the asset management arm for Mubadala Investment Company, the sovereign wealth fund for the government of Abu Dhabi. And our group is really the early stage and early growth investors for the sovereign. My group focuses heavily on life sciences and healthcare. We do anything from company creation to Series A, as well as early growth. It's great to be here.
So Jack, let's start with you. You got a new, fresh fund. You guys have been building and incubating in a wide variety of industries, from healthcare to even fintech and others. What is exciting to you right now? Where do you imagine this capital will be deployed over the next 12 to 24 months?
Yeah, I think it's a really exciting time to be building companies. Virtually every industry at this point in the United States and around the world is open to being disrupted or partnering with technology in some way. I think that we're going to see AI. A lot of people are talking about AI from a consumer perspective. So ChatGPT, things that you can log into. My perspective is actually going to be deployed in every enterprise, every job to be done in every enterprise. It's going to be across every vertical, every single function that you can think about. And it's going to make people more effective. It's going to make companies more productive. It's going to enable things that are magical that could never be possible before. So We're focused on deploying AI across every industry. We think that's a big opportunity, but we're continuing to innovate in spaces like healthcare. We started a company not too long ago, a few years ago, 𝐬𝐮𝐬𝐿, that from launch, we took public, for a few $1 billion. Within 3 years, we're building all sorts of other companies there. There's a lot to do in telemedicine. 33 cents of every dollar in the US economy is going through the healthcare system, and outcomes are reversing. People are dying sooner. It's totally broken. You could start companies for a lifetime in that space, and there's a lot of room for improvement. Real estate is a big area where there's still room for improvement, finance and fintech, commerce, and increasingly, we're really actually excited about energy and climate, which I think for the first time is really investable in a significant way. The Biden administration obviously passed the Inflation Reduction Act. Some people don't know this, but $360 billion was earmarked toward clean energy and transitioning us to that economy. There are gonna have to be a lot of companies that are created that help with that transition. So we're also focused on that, and there are a lot of interesting things to do there.
That's awesome. And Zach, for you, your model is super unique, having both this service company as well as the fund simultaneously. So when you're a young, hungry, dynamic academic that maybe has some compelling IP, whether it's a small molecule or a biologic, what have you, what does it look like to interface with you and the team? And what ideas have come to you since you announced a number of months ago?
Yeah, I mean, the whole thesis is that early stage therapeutics and biotech broadly, but we just do therapeutics. It's just exceptionally difficult as a founder to go from your concept, whether it's a technology or a biological insight or a new approach, to roughly what you have to get to is a preclinical data set, kind of in vitro or in a mouse potentially. And that data set ultimately is what enables you to get to the next step and the next step. And there's just this incredibly difficult set of work you have to do. And when you make a mistake in that work, you pay for the mistake. Unlike in software, where I started, where you make a mistake in software, it's really not that bad. You can fix the code and you're off the next day. In therapeutics, you make a mistake. You may not know you made the mistake for 6 to 12 months. It can be hundreds of thousands or millions of dollars. And in some cases, you got to go all the way back to the beginning. And these mistakes are happening at the point in time in which the company has the highest cost of capital, right in the beginning. So what we do is we say to the underlying founders, let us help you get from A to B. And what we're gonna do is we're gonna write the full check, right? We're gonna write you that $5 to $10 million seed check to get you the data set you need. And then we're gonna pair you with a pod of people, all of whom have typically 10 to 30 years of deep drug discovery operating experience, right? So these aren't like 28-year-old postdocs. These are serious folks who were previously the chief scientific officer, the SVP of chemistry, the head of discovery biology, folks that have done this before, they've screwed it up, they've done it in the correct way. We pair them together and we guide them through a series of services. Some are this kind of service, some are physical services, from the seed to that data set. And it's really narrowly focused on that moment in the company's life with this one core thesis, which is that we're just not smarter than the market. I think, one of the things that's really kind of amazing to me about these two groups over here is that they actually come up with the ideas. I'm not that smart. So we figured what better way to do it than to allow the market to drive the ideas. So that's the little twist here. It's funny, people have described it to me as like the flip of Flagship. Right? We're like, Flagship does everything internally and does it exceptionally well. And we kind of flip it around and say, well, we're not going to come up with the idea. We'll help you if the founding idea comes elsewhere.
And what's an example of a company? Have you begun to speak about some of the work publicly, or?
Yeah, so we did 4 investments quietly at the end of last year. We did 2 today, actually before, finally. They've been in diligence for a while. We have another term sheet going out. I'll give one example. It's probably a very good example of why this is so hard. This is an operating founder, so somebody full-time CEO, and an academic founder who focuses on computations. This is a computer science-oriented background that looks for cryptic pockets in known druggable proteins. So, there's the mic.
Oh,
Gone?
testing. We'll have to enunciate now.
Cut me off?
Yeah.
It was that bad. Cut you off.
All got cut off, so you're good.
Anyway, the company focuses on cryptic pockets. It's a technology to go and find those pockets, right? So the question is like, where do you apply it? Which targets? In what disease? How do you actually do the hit finding strategy? How do you go and develop the actual chemical matter? All of these like little steps that have to happen, that's what we do. We help the founders, but it's not our idea, right? It's not our underlying technology. Ooh, we're back. Yes. I got us back to the, okay. And so our team pairs with the underlying founding team. We do a lot of the, what I think of as like therapeutic specific strategy work. We do a bunch of the execution, founders bring the rest, and we guide them through. And that's what we've been doing with this team now for about 6 or 7 months. We did the entire target strategy for them. We did all the vendor mapping. We did the vendor contracting. We helped them hire in a set of people. And we provide that part as the service, and the funding is the other piece.
Got it. So, I mean, I've had the luxury of getting to know you, Lovisa, as well as Jeff Von Malton and a few of these other really dynamic entrepreneurial athletes at Flagship. Every time we meet a new team, it does feel like the biotech Olympics of sorts. You yourself, as you mentioned, announced a new company earlier this week, Metaphor. Would love to learn more about that and what specifically you mean as you look to kind of unlock some of the therapeutic potential of biomimicry.
Absolutely. So Metaphor is a company we've actually been working on for the past 2 years or so. And we started with, as we always do, what if? And the question was, what if we could actually mimic any molecular interaction in a programmable way? Because if we could do that, then we could literally unlock any target, most intractable targets in a very systematic way, and start addressing a very broad sort of unmet patient need. And we actually went, in this case, to nature for inspiration, because it turns out that nature's mimicry is like one of the oldest tricks of how organism can gain adaptive advantage. And with evolution, how it's sort of just maximizing fitness. So for example, how it can mimic another species to elicit certain function. And it's like you have these vulnerable little butterflies that can mimic with their wings the eyes of an owl, and thereby exerting the function of that predator. So what we came to realize that it's actually so that mimicry is something that happens within our bodies as well, over and over and over again. So what we have built a platform around is how do we capture our own internal mechanism for mimicry? Because what that allows us to do is literally take any molecular interaction and literally stamp it onto a molecular format. And then we create like a mold around that molecular format, so that what is otherwise a almost like undescribable problem when it comes to degrees of freedom, we can condense it down into something that is actually solvable from a computation perspective. And that gives us a very systematic and like programmable way of designing new therapeutics. So that has sort of opened up a lot of many sort of completely untractable targets before for us. And we can now start to design to specification. You know, we need that exact selectivity, specificity. We need that exact functionality, et cetera, et cetera. So it just opens up, in true Flagship manner, a very, very broad space of applicability. And so that's Metaphor.
Can you tell us too, like, what it means to be an origination partner at Flagship? Like, what happens on a day-to-day, week-to-week basis for you?
I mean, we originate companies, and it's literally so that I think we always keep a lot of ideas going. It's like super creative, because if you have so many different options, the opportunity cost for actually starting something becomes so high. So it's not just the allocation of capital, it's also that you need to put your brain towards it. You need to, put your team towards it, to put your time towards it, which is really what costs the most. So what we do is that we look for the big leaps, how we can actually go to the non-adjacencies, go to areas of where we can unlock something that has just not been explored before. And the reason why we go out there is because you're alone. And many can say, isn't that more risky to go there? But honestly, it's actually, there's a difference between risk and uncertainty. I mean, risk is something you can actually scale. You can say it's highly risky, but only if you know what it is that you're actually going to do. We choose to go to those non-adjacencies because there is uncertainty, absolutely. But if you start to sort of scratch the surface, it can actually be lower risk because you actually find a way to actually reach that new potential in just a way where no one else has been looking before.
Definitely.
So that's sort of our methodology. And we start off with many, many ideas. It's almost like evolutionary pressure where ideas fall off. But when you get to that point, and I think for every company, you can tell when where you were sitting, when you sort of, okay, we got it. This is what we should be doing.
That's it.
When it turns from not the what and why, but instead how you should actually do it.
Definitely.
And we often go into areas where we are the subject matter experts ourselves. But instead, when we have figured something out, we go out to key opinion leaders and we pressure test the ideas with them. And when they kind of say that, okay, yeah, it's nothing that is kind of wrong with it, it's just no one has ever thought about it before, that's when we feel like that's our space to innovate.
Super clear. And Alaa, I mean, you're at the helm of Mubadala, investing a lot in healthcare as well as life sciences, and such a unique setup as a $300 billion sovereign wealth fund, super nimble, investing in growth and mid-stage and even incubating. Love to hear more about that, what you're specifically interested in today, and in the broader context where the macroeconomic environment as a huge asset manager is a little bit tricky and murky in this area. Something like 20–30% of public biotechs have traded below cash. Many are down 50 to 60% since their peaks in 2021. How are you thinking about your investment approach in the backdrop of that macro environment too?
I think it's a good question. I mean, if you look at what our group does is really betting on outstanding founders, really betting on outstanding science and breakthrough science to impact patient lives in a positive way. That is the core of what we do. Now, how we do it and the toolkit that we tap into is the secret sauce, basically, that we're trying to develop over the past 7 years here on the ground. So we launched our ventures business in 2017. We've deployed north of an $800 million roughly in around 40 companies in life sciences and healthcare. And you might ask, like, why is even Mubadala as a $300 billion sovereign interested in such a small pool of allocation? And I think if you look at what Mubadala investment company is looking for, is looking for that diamond in the rough company that they can bet a significant amount of resources behind, both financial and human resources, to help expand and build the generational companies that they hope to build with time. Yep. And that's one of the tools in our toolkit that we actually bet on. So we come in super early into these companies, as early as company formation. Our bread and butter is the Series A. And we leverage Mubadala not just for capital, we leverage Mubadala investment company for capital, for access to global markets. And we've built on the ground operational expertise in the markets that we deploy capital in to stand these companies on its 2 feet until they're ready for Mubadala investment company to come and pile the growth capital that basically these companies will need to get to their maximum potential. So the team, in San Francisco right now, we're a team of 23 people. All we do is look at science, look at breakthrough innovation, meet founders, and meet great co-investors like Flagship and others, and try to bet on the next big thing that is going to transform patients' lives. And if we do so, we are going to generate outstanding financial return, because also the difference between Mubadala Capital and Mubadala Investment Company is actually we have third-party capital as well. That's right. So the fact that we have third-party capital puts even further pressure on us to really do outsized financial returns, but also leverage that ecosystem to help springboard our companies forward.
And you were mentioning to us backstage about, hey, this year we might do somewhere around 8 investments, 2 of which could be incubations. Can you tell us more about what it looks like to get a company off the ground in that way at Mubadala?
So we've launched 3 companies so far, ever since we've started this ventures business. The company formation is a muscle that we've been building for the past 5 years, and we've been really kind of churning companies only for the past 2 years. The way that we build companies maybe is different from Flagship and definitely different from Atomico, which is basically leveraging our venture partners and EIR network that have ideas that want to go and build company in ophthalmology or neuroinflammation or in surface protein degradation. And we bring them along, We partner with academic founders. Example, 𝐕-Biologics is a company that we spun out of UCSF, Jim Wells' lab. And the way that we've done it is we hired a venture partner, spent a lot of time building that company internally, and then we partnered it with a like-minded investor to kind of bring a lot of talent that actually we're still developing into that company. So our venture partner stepped in as a CSO, and then the other partner, which is Polaris in that case, put in the CEO, and we stood that company and from the ground up, right? So we're going to repeat that model over and over again. We don't do these companies alone. We believe in the power of the syndicate at the early stage, so we're always looking for a like-minded partner to come and help us build. The companies that we really bet on, we invest them at the early stage where we put $15-20 million at risk, but then we kind of pile the truck back into the successful ones so that we can create them.
Crystal clear. I'd love to switch topics a little bit and just go straight to AI. So, I mean, there's been a Cambrian explosion in this ecosystem on the backs of OpenAI's announcement in the last few months. LLMs are starting to impact some elements of care delivery, other aspects of the healthcare industry. I mean, for you, Jack, as having a front row seat to this and having an army at your disposal ready to capture this momentum, where are you seeing the opportunity specifically at Atomic?
Yeah, so we've started a couple of really interesting companies in AI that we're really excited about. One company is a company called Replicant, which essentially automates all the interactions within a call center. So you think about a call center, you call in, we've all had this experience, you call United Airlines, there was some weather event, you're on the phone for 4.5 hours, everybody's miserable, right? So what does Replicant do? It answers the phone instantly, it speaks like a human, you can speak to it in natural language, and it can resolve about 50% of the issues that people are calling into a call center about without roping in a human being. What does that do for a business? I mean, that's incredible, right? Like, if you're running a call center, 8 to 10% of your employees are churning every single month. You can't hire enough people to backfill them. People are getting yelled at on the phone, customers are upset. This technology actually is able to resolve those issues in half the time that it would normally take a human being to do them, more accurately and with a dramatically higher CSAT, which is what you measure in the customer service industry, to see what the satisfaction is of the customers. So that's an amazing use case that we're working with insurance companies and banks and retailers, and every time actually you place an order on DoorDash or Postmates, if they don't have an iPad at the restaurant, a Replicant is making the call instantly. And even in the face of background noise and accents and things like that, it is placing your order more accurately than a human being could. Another place we're using AI is at the payments layer of companies. So there's all these reasons why people can't pay for things on the internet. They intend to pay. How many people here, you probably subscribe to, let's say, the Wall Street Journal or something like that. And then you go to log in only to find that it doesn't work because for some reason your credit card got failed, failed at some point when you were trying to log in. This company uses AI all across the payment stack, every single part of the layer to optimize it, make sure payments are going through to companies. From a company's perspective, you can integrate this technology in 24 to 48 hours and your top line will increase by 10% in a year, which means that all drops to your bottom line. So it fundamentally can transform the LTVs of companies, have them grow faster, make public companies hit and exceed their numbers in super interesting ways with literally a 24 to 48 hour single engineer investment. So that's an example of some of the power. But as I mentioned, this is going to happen in every industry. It's going to happen in healthcare. It's going to happen in real estate, fintech. It's going to happen within the enterprise in specific functions. We're also working on a lot of ideas there. I think some of the places where we're going to see some breakthroughs in particular over the next year is in development. AI is actually getting, believe it or not, pretty good at writing its own code and making engineers a lot better. So think of every little part of the stack where you can go and create value as an engineer. That is going to be made faster, better, more accurate, QA'd, et cetera, at a rapid pace, and it's going to speed up the development of the entire technology industry.
It's crystal clear. I mean, Zach, for you, on the services side of Curie, are you kind of building out AI services for things like computational drug discovery, programmable gene therapy? How are you thinking about it there? And then just all the inbound companies that are coming your way too. Are you seeing this trend as a part of what you're currently investing in?
Yeah, on the first one, no. We try to be asset light because the technology moves so quickly that, you build a hammer, you look for a nail. And I think that's where, some of these companies can get themselves in trouble, where they have this piece of technology, they spent $100 million building it, they're looking for stuff to use it for, you're always kind of looking to use it there. And in our model, given the ideas come outside, we want to make sure we're doing the right thing for that company with that context, and like having this hammer, I don't think is useful. So we prefer to say, look, the market's going to do some wonderful things. Let's go find you the best technology that's available at that moment in time. So we're much better at scouting and executing than we are at building on the AI side. I'd actually be curious what Lovisa thinks, but in therapeutics, I'm not convinced AI is going to have as big of an impact as it is in like general internet, because you're traversing not just like a digital world, there's a physical world that you have to, eventually you have to make something, right, and stick it into a human body. And AI, generally speaking, at least in my experience, is only as good as the training data set, right? The training data is kind of what drives the outcome. And we still don't really understand a lot about how the human body works. And so there's limited accuracy in the data sets. You stick one data set that you train on, but like the minute you put that into a human being, you realize, there were flaws in the underlying training set. So I think of it as like cost reduction. I think you're going to see things get cheaper. Chemists in particular will be significantly more efficient in their work. I think chemistry in particular is the big one. But I don't see it as a like AI only company in therapeutics. I don't believe that's going to happen, at least not until the underlying training data gets better.
Sure. Yeah, I mean, Lovisa, many of your companies have a computational biology orientation. We didn't talk about a priori and others, and it seems like Flagship broadly is leaning into this trend too. Can you comment a bit more about what you're working on and what Flagship is working on more broadly in AI?
Yeah, and maybe I start with, I'm a computational scientist by training. So back in the late 1990s, we were literally applying neural networks to how to design better drugs. And then it was perceived as complete science fiction, and people like, what are you doing again? So I think it has evolved a lot, but I think now, for me, it's a new baseline. I don't think there is anything that we're ever going to build that don't have some part of AI ML in it. But to your point, I think there is one very important aspect to actually, get to the right level. It is the interplay between the biology and the machine learning. Because it's like you need to be able to understand the biology so that you can actually design your experiments so that you get the right parameters from that experiment so that you can parameterize and build the right algorithms to actually explain that complex biology that we're after. And I think now with the types of technologies, next-gen technologies that we have, along with, yes, compute power, we can start to do mechanistical machine learning on like full cells, etc. It is still a lot of work, but I think the most important part is to understand that interplay between biology and ML, and probably most importantly, to have the right talent that speak to each other, where the set can literally move seamlessly between the biology space and the ML space and interact in the most optimal way, because I think that's where machine learning can have huge impact on what we're doing.
Definitely.
But it takes
time.
If I may add just one point to Zach's point, definitely computational chemistry because it's structured, is definitely better suited for AI. But I think there are two winning factors or two potential applications for AI in therapeutics, to answer your question, Zach. The first one is companies that are generating their own experimental data at scale and leveraging that data to drive unique insights. For example, Recursion Pharmaceutical, which is a company that we backed very, very early and at the beginning of that company, took it public, is able to create petabytes of data that they can leverage to draw insights of how these drugs are impacting therapeutic modalities and therapeutic models at cell types. So that's one big area I think that's going to be continue to be disruptive as this data scales. But then the other point is really patient stratification and patient selection for clinical development is going to be very critical. Like we've solved the idea of precision oncology. I think precision oncology is sort of like now is a common thing to talk about. But how can you apply that for immunology, for neurodegeneration? And in order for you to decipher those very complex biomarkers, whether it's genotypic or phenotypic biomarkers, you will need AI machine learning. And I think that's where these tools shine. Fully agree, a standalone company with only AI machine learning is not going to be able to solve a therapeutic problem. But I think these tools are going to be essential if these companies need to, can be more efficient and will need to be more efficient to compete in a marketplace.
Yeah, it's interesting because like in software, it cuts the cost of everything. Like everything just gets cheaper. And actually, if you look at like Recursion's a good example of this, or Incitro or others, where the kind of like the cool AI companies in biotech, and they are very cool companies, they're actually really expensive to build now because you have to generate the source data yourself. You need the hardware, you need the labor, you need the experiment infrastructure. So it's just very different in biotech than it is in kind of like general internet.
Yeah, and I mean, Alaa, from your perspective, for LLMs specifically, have you seen any killer applications? There's these things like co-pilots for scientists that are beginning to bubble up to help kind of prioritize, figure out the right hypothesis, move down the chain all the way to preclinical, kind of be there with you along the way, iterate. Have you made an investment there yet, or is it still kind of wait and see?
I believe sort of like large language models are more impactful in healthcare delivery as opposed to therapeutic discovery, to be honest with you. Because just the amount of data that exists out there in EHR that can be structured firsthand and then leveraged for LLMs, I think is order of magnitude bigger and more consistent than what exists on the bio side. We haven't done any investments, but we're looking for potential disruptors in that space. Most important thing here, I mean, is to reduce the cost of care, right? And to reduce the kind of medical errors that happen in the healthcare delivery system. So for therapeutics, LLMs, I don't think so, but for healthcare delivery, potentially.
Yeah. So in the final 3-4 minutes here, I'd love to hear from you guys on whether it is you're incubating a company or you're assembling a team or someone, Zach, is coming to you with a new idea. What are the ingredients that you look for in founders and founding teams when you're assembling them, Jack? You can kind of go down the line here.
The best people that we work with, I would describe as relentless, primarily. I think there's kind of two types of people in the world. There's people that wake up and take their day and they play defense all day and they take what's on their plate and they process it. And there are people who play offense and they wake up in the morning and they say, I want to get 3 things done by the end of the day. They're the most important 3 things and we're going to get them all done. And those are the people that we want to work with, people who are persistent, resilient. Obviously, they have to be incredibly smart. And they prioritize speed. And different people think about speed in different ways, but at least in our industry, it moves so quickly that it pays you have to be ahead of everyone. You have to be able to move fast. You have to make trade-offs of, yes, I could build something perfectly, or I could build something quickly, get the right answer, and then decide if I'm gonna build it perfectly in the future. So I think those are some elements that we look for. I think also in founding teams specifically, and in the technology industry, I think actually Google messed up the entire industry because you had 2 PhDs out of Stanford go and start Google. And then everyone thought you needed PhDs out of Stanford from computer science to start technology companies. And we actually don't believe that that's a great way to build technology companies. There's more failure there. The right way to do it is you do want your Steve Wozniak, but you also want your Steve Jobs. So one of the things that we're really good at doing at Atomic is we assemble people that are amazing at building technology, validating it, they're top of their league, but you also need that person who's charismatic, who can sell the vision, who can build the team, who can go get partners, and who can raise the capital. And if you can find those 2 people, it's amazing that both of those Steves collided in the world. They actually don't collide that often, believe it or not. We're able to instrument the partnership of creating super teams like that to go after the right ideas.
Zach, what are you looking for? You had a dynamic duo going there with Nat.
Yeah, it's really interesting to me because I spent 14 years in software. I mean, my background's in software, right? And now I'm in biotech, so it's totally different. In software, I agree with everything Jack said. I would always look for, I call it people who can stretch up and down. So they can talk about like strategy and the balance sheet and the cap table, and they can communicate really clearly, and then they also understood the technology reasonably well in one person. And you're looking for that because in software, like you've got to sell it, you've got to be able to be external. Unless you're building something that's like pure consumer, most good companies require that kind of external presence because you need a business model to work. It's kind of not true in therapeutics because you're not really, like, the business model is clear. You're going to sell this drug after approval, right? Like, the money's there. The question is it going to work? And so we look for like a slightly, my theory is you can hire that like sales and external talent significantly easier in this market if the data is good. And so everything we focus on from the founder perspective is, are you actually an expert in the thing you are pitching, right? Are you an expert in the biology? Are you expert in the underlying technology? Are you an expert in, you know, whatever the therapeutic approach is? Because that's really what drives the business. Like you kind of can't fake it in biotech, because at a certain point you put it in a human being and you run a trial and the data tells you whether it works. It's really interesting to me that there's a little bit of a difference. You still need that person eventually, but you can kind of hire them later in the cycle.
Yeah.
I mean, a lot of what Jack said, I would agree. Those are the kind of phenotypes that you're looking for, absolutely. But then I think also in that early stage of when you're forming a company, there is something about sort of the team genius, and you need to find those people that can actually build off each other's ideas and sort of just, you create something, the next one builds on it, and it's like that interactive. So making it a team sport, even though it's a group of individualists, and finding those that can operate at both levels and making the most out of it and thrive in that environment. I think that's really important, what I look for a lot when I look for people, and the ones that can sort of fluently move between different areas of expertise and you know, being the connectors between each of that. I think that's also very important.
Yeah. It's funny, when I think team, I think internal team and external team.
Okay.
You guys covered everything on the internal team, and it's hard to disagree with any of the points. But the external team is as matters, which is the syndicate, right? I mean, out of 40 companies that we invested in, 2 are not doing well. And one of them is because the syndicate is unable to manage it well, to be honest. So the more you have people around the table, the better. But the type of people is important, and their experience is important, and their incentives and how aligned these incentives are going to be important. So when we think about building these companies, we definitely think about the science. We think about the founders. We think about the people around the table to build. But we also want to be very careful of who we bring to the table to help us execute on the management plans and support them on the long run.
Awesome. Well, guys, this was really great. I'm also glad I could bring Jack and Zach together for a little alumni reunion. Yeah. Well, thanks, guys, so much.
Awesome. Thanks.
Yeah.